Hey everyone, welcome to the S&P 500 video on SPY, the ES SPX mini futures, whatever you want to call it. It's all pretty much the same to me. I want to talk about two scenarios today. I want to talk about the bull case and I want to talk about the bear case a little bit. So before I get into any of this, of course, this is not financial advice. I'm not your financial advisor. You are responsible for your own trades, managing your own risk, doing your own research, and I am just giving my opinion on the market. So let's go ahead and take a look at this. I guess before I get into the charts, just a shameless plug for the Discord server. If you want access to our Discord server, just throw in a comment in the YouTube chat, and I'll be more than happy to get an invite code out to you there. And so I see we've got some people joining in here, so hopefully things are going okay. Let's go ahead and take a look at the charts. The first scenario I want to take a look at is the extreme bull case, right? So there's just a lot going on with money printing and inflation and all of that, and I think that there probably is something that is going to be occurring over the next several years. I do have to have a little bit of a bearish bias towards the market, but in the meantime, this sucker just continues to just keep going up a lot more than a lot of people expected. So let's just take a look at this count. So this is our bullish count, which actually, and you'll see here that I've got technical reasons why I've got targets all the way up here, basically targeting at some point going as high as almost 5,000 on S&P 500. Now we're talking years down the road. We're not talking like next week. So years down the road. So, long term I do have to be bullish on stocks, but short term, and when I say short term, I guess I'm talking like within the next year, maybe 2 years. I do have to have a little bit of a bearish bias, but for the time being, this looks like this is what is going on. So basically, the count that I've got on this so far, let me just get this to where it looks okay. And I'm going to have to zoom out just a little bit so you can see the whole chart. There we go. All right, so what I've got, at least what I believe that I have here, is is a little bit of a leading diagonal. So I can count 1, 2, 3, 4, 5 into the 1, A, B, C into the 2, 1, 2, 3, 4, 5 into the 3. We've got a little bit of a correction here, and then so we have this this A into an expanded flat into the B, and then a C. Let me go ahead and just mark that in here so that we have a little bit of clarity that I'm counting this as an expanded flat. So from up here, we've got an A, a B, and then we go down for the C down here. So again, an expanded flat scenario that I've got down here on a lesser degree. All right, so we've got a nice A, B, C. We've got an A, B, C into the A, B, C into the B, and then we have an A, B, and then a C down here to complete the 4. And then from here, of course, if we wanted to, we could count this. Definitely, I see a 1, 2, 3, 4, 5 into the completion of this. And we'll go ahead and just mark that out too while we're here. It only takes a moment to do that. So we've got a 1, 2, 3, 4, 5. And this is a valid Elliott wave here. So there's nothing here that looks looks out of nothing looks out of place, right? So as far as the high that we've got right here, we don't have any invalidation there at that level when we've got the 1 to 4 comparison. The 4 does not overlap the 1, so that works. And then we go up for a little bit of an impulse up here into the 5, which completed a larger 5, which completed in the bull case a wave 1. Now from here, it's pretty clear. It's pretty clear. We've got 5 waves down, 3 waves up, 5 waves down, right? I'm not going to spend a whole lot of time digging that out, but it works. From down here, we have an A, and then A, B, C into the B, and then we have our C up here into the B. And then with this, again, I can count 1, 2, 3, 4, 5 into the A, B, C into the B, 1, 2, 3, 4, 5 into the C, which completed the 2. All right. Now again, we're talking the bull case here. So that's nice, valid. It's clean. It's really pretty clean when you look at it this way with these bull goggles on. All right. So now that we've got this out of the way, Now we've got the 1, 2. Let's just pull this down and back. All right, so now let's look into the future a little bit more. From this 2, you would expect there to be an impulse, and we have one. We've got a 1, 2, 3, 4, 5 into the 1, okay? So again, let me just go ahead and put this in here. From down here, we've got a 1, 2, 3, 4, and then a 5. Up here into our 1, right? And then what do we have going into the 2? We have exactly what we would expect from up here. We've got an A and a B and then a C down here into our wave 2. Again, it's pretty clean, okay? So this works into the 2. Then we got to go up into the 3. I'm not going to try and dig the 3 out of this, but we've got a nice wave 3 here. It extends longer than wave 1, which is what we would expect. We go down here into a small correction to the 4, and then we've got 5 waves up here into the 5 to complete our nested 1 wave right there. Then what do we have? We've got a sharp correction down here to complete an A, and then a B, and then we go down here for the C. And the C, you can see this one, you have a nice down, up, down. So that all works. That all works into our wave 2. So let's just go ahead and clean this up just a little bit here. I think that this count looks nice. It looks pretty nice. From there, we've got our 1. So we've got off of the bottom, we've got a 1, 2, 3, 4, 5 into the 1. From here, it's pretty clear. We've got a little bit of a correction. So we have an A, a B, and a C down into our 2. Okay, so just to recap, we've got a larger 1, 2, a smaller 1, 2, and then we have an even smaller 1, 2, which means we should be seeing an impulse up into 5-wave structure up into wave 3, which I currently have targeting about 33.50 to 33.60. Maybe 33.70, somewhere up in this range above this red block. And so let's just talk about this red block for a moment. This red block is where we are expected to see the most resistance. And the reason why we expect to see the most resistance is because of this right here. We've got our top here. We've got our top here to create the bottom. We have another top here to create the bottom, right? We broke through. We had some confluence inside of this zone, and then we flew through it on the way down. So I would expect that the people that bought up here are going to be looking to sell here as well. Anybody that bought above this block is going to be looking to get out in that zone. That is how support and resistance levels get created. You have a bunch of people that bought up here at the top, and they very well could have been holding throughout all of this. So you've got this move up here. We have a little bit of resistance just shy of 3,400, and then we saw a rollover, right? Likely there is some bearish divergence here. I don't have any indicators on this chart because I want to strictly focus on Elliott wave on this. So we had the rollover, and then we fell down from there. But nonetheless, I expect, based on the clustering that we have here, there to be a significant amount of resistance there. And we've kind of already seen it. We haven't exactly touched it per se, but we've gotten pretty close. We've gotten pretty close to it. And there's also that gap that everybody likes to pay attention to. Oh, look at the gap, look at the gap. I don't know. Gaps do tend to fill, but don't get too overly just connected to something just because there's a gap, right? I mean, look at the gap on Bitcoin. We had a gap up the other day, and everybody's like, oh, we're gonna fill that gap, and then it just like blasted off. All right, so don't get too connected on gaps. Same could be true here. We had a gap there, and you could have had a whole bunch of people saying, oh, we're gonna fill the gap, and then what happened? We dropped like 20% or so. But anyway, 1, 2, 1, 2. 1, 2, and then I'm counting a 1, 2. All right. One way or another, I do believe this is the 2. Whether or not the 1 is up here or the 1 is right here, I'm not going to get too caught up in that. I do think that we have an impulsive move up, and then we have a correction, and now we're working on the 3. The 3 is, it's not pretty, and we are in the middle of putting this all together. So, what this looks like it's really hard to tell at the moment. The fact that we created a little bit of a low here compared to the low back here, so let me just zoom into this guy right here. So this is lower than this guy over here, which means we can't say the 1 was here and the 2 was here, because this went just a little bit lower. So the low here is 31.0525. The low right here was 31.0575. So it was only 50 cents, but it went lower, which invalidates the idea that that 2 would be over here, right? Again, the 1 could be here, the 1 could be here. That doesn't really matter too much to me, because even from down here off of this, I can count a 1, 2, I extended 3, 4, and then finish the 5 to complete this one wave here, and then we have an ABC, ABC, ABC to complete this 2. So it works itself out. What I'm unsure of right now is this right here. So what I can see, we have, this 5, you can count 5 up here. From down here, you could have a 1, 2, and then we've got a 3, 4, 5 to complete this. Could be wave 3 that completed right here. That could work. Now we're coming down where we have not violated this 1 wave, right? If we violate this 1, and we have not done that yet, then I would say this is where we have our first level of bullish invalidation, but we haven't done that yet. We tried to get down there, it didn't go. As far as a 4-hour candle concerns, we're about almost 2 hours into this candle. We've almost fully engulfed the prior futures overnight candle, our last 4-hour candle. So now what we are faced with is a potential ABC right here that has already completed. So from up here, A, B, C into the B, and then we've got a C wave right here to complete this 4, which means if we're going to be bullish, we need to see a thrust up into the supply zone, maybe not today or tomorrow, but next week, very likely, we will see that thrust up above the supply zone into our 3370 target, which would complete wave 5, okay? Complete wave 5 to complete a lesser wave 3. And if that happens, then this is bullish, okay? If we get above that red supply zone, that is bullish. And the target for that move, let me just put this up here. As I zoom in and zoom out, the counts get a little messy. So this from this wave 2, right? So we can see I've already measured this from a 1, 2 right here. I've counted from here using my fib extension tool. That's how I'm getting my target up here to the upside. There are very few leading indicators, right? You have the Ichimoku cloud, which some people use. I don't really care for it too much personally. And you have Fibonacci to kind of give you a sense for where the market can go, right? So that's why I use this tool to do that. And I'm just going to go ahead and measure wave 2 to wave 3 to see where we're probably going to pull back to. Wave 2, if we make it up here to wave 3, we're probably going to come back down here to about 32.22. Okay, that 32.22, and then we'll kind of see where we go from there. But if we're going to remain bullish, and I mean really bullish, and we just don't revisit these lows, which I think we will, but if we don't revisit those lows, here's a technical way for us to get up much higher. And you can see that I have put some technical reasoning behind all of this to get ourselves all the way up here to like 4,800. Okay, so the first thing I'm measuring is this first move, wave 1, 2. So if you look at wave 1, 2, and that's this guy right here, right? So watch this guy right here, pulling ourselves down to wave 2 right there. You've got wave 3 right here at 4,000, maybe 4,050. That seems like a pretty logical level where we would see some resistance. We pull back to about 3,500, okay? and I'm getting that based off of this 382. Again, I'm measuring from wave 2 up to the projected wave 3 at about 4,050. The 382 is sitting there at 3,550. That seems also like a pretty logical place for there to be some support. And then the upside target, which we still have yet to determine, right? But you've got a target up here at about 4,800. You've also got this target, you know, assuming all of this other stuff happens, you have this upside target up here at about 4,350 as well. One way or another, if we do move up above this supply zone, that is very, very bullish, okay? And if you take into account currency inflation, I can see the stock market also inflating as well. And inflation is not a good thing, right? But you know, we'll kind of see. So that is my bullish scenario. Let's take a moment and just kind of take a look and see where we could potentially be going on a downside. All right, so from this, we've got 5 waves up into an A. We have an A, B, C into the B. I think we can all agree that this is a corrective move right here. Okay, and then we've got 5 waves up, and then we've got a correction, and then going down for a correction here. I would say the bearish move is going to get us down to about 2,900. I still am not married to a lower price yet. I can see this as 5 waves down. Okay, so let's look at this here. So from here, we've got 1, 2, 3, 4, 5 into this A. From there, we've got A, B, C into this B. This would be an expanded flat. Okay, that would be an expanded flat. And then what we basically just saw is a 1, 2, and then we need to see some acceleration down, probably to about right here. We get a correction, and then we finish our move down here. Okay, now this is a short-term bearish target, which would take us down. I mean, honestly, it would take us down pretty low, back down to about 2,900. Okay, and I've got this sitting here at about 2,890. Let's just take a look and see what kind of a technical backing we have for that move. So if we pull this back like this, you know, potentially wave 3 here, wave 5 here at 3,000. So maybe we don't get down as far. Okay, so let's just go ahead and kind of zoom in on just this node here, just on this guy. So technically, let me just try and pull this down here and get it as close as I can. So this looks, yeah, this looks pretty good there. All right, so we've got a 1 ABC into the 2 right here. The 3, technically the target would be down here about 3,100. That seems like a pretty, you know, it seems like a pretty solid number to be retracing to. Then we'll have a pullback, and then our downside target technically is going to be sitting here at 3,000, almost 3,000 exactly. So maybe we only get down to 3,000 before we move up. The bearish level of invalidation is this wave 2 sitting right here at about 32.57, 32.60 in that area. Definitely our bearish level of invalidation, of course, is really going to be at 32.85. But if we're going to go down, and if we're going to go down next week, this is what's going to happen. So again, you've got 2 scenarios here. You've got our bullish level and our bearish level that we have outlined here today. Where is it going to go? That is what we are always trying to figure out. Either we are going to move up next week into above the supply zone, or we are going to pull back next week and go down to some prior support zones. I would definitely say that from a bearish perspective, this level right here where we pivoted previously is going to be pretty important, and that's sitting there at 29.83. You've also got this level down here, which could definitely get tested, which is going to be down a little bit lower, right about there, at about 29.25. Where is it going to go? Well, only time will tell, but we definitely have our bullish and our bearish levels of invalidation, which we have outlined here. Our bullish level of invalidation is going to be sitting here at about 31.83. Our bearish level of invalidation is going to be at 32.56. All right. So that zone, let's just go ahead and put that in here. We've got from here all the way up to here. This is our zone where we're trying to figure out where things are going to be going. So we've got that on both sides there so that we can see it. That is what we're going to be paying attention to, our bullish and our bearish levels of invalidation. If we break up above this, we know that our target's going to be sitting here at about 3,400, maybe 3,380. If it breaks down below this, then we know that we have our bearish targets to keep in mind, which basically is going to take us down to about 3,000. Okay, so gosh, I hope this helped you guys. I apologize. I've been talking about this for 20 minutes now, but I wanted to get this out there. We had the question on the Discord. What's the bearish count? And what's the bullish count? So, our bearish count really isn't that bearish right now. Our bearish count is just, it's conservative. It's possible. Based on open interest, I don't think we're going to be going down into oblivion just quite yet. Too many people are really, really super bearish. So even though I have a bearish bias, I'm not going to be trading it as aggressively as I would in a downtrending market. Right now, we are in an uptrend, and I have to trade it that way. It could happen today. It could happen tomorrow. We could take out these levels up here. For now, I am mostly going to be sitting flat waiting for some decision on this. So if you're on the Discord and you're wondering what I'm doing, I'm just going to kind of be sitting back and waiting for some scalps. And for scalps, I'm talking about just like some quick plays where I've got a trade and I don't hold it for more than a day or two, and then I'm going to get out. So I may be considering buying the bottom of this range, selling the top of the range. I haven't really decided just quite yet, but right now this looks like what we have in front of us, which is a little bit of indecision, but we have clear levels of invalidation, so we need to keep an eye on those and we need to hold true to those. If we break above, don't be super bearish, right? You've got to be a little bullish if we break above this. If we break down below this, be careful buying the dip, because if we break down below this, we should be seeing some accelerated selling that'll take us down to 3,100. So just be careful. All right, guys. If this video did help you in any way, shape, or form, like, subscribe, share, all that good stuff. And of course, wherever you are in the world, I hope you're having a good day, a good night, good evening. Stay happy, stay healthy, and take care of yourself.